Welcome investors, let's get disclosures out of the way. I am an individual investor, I am not a financial advisor. This should not be considered your financial advice. My name is Dave and this is The Market Board. Today, let's take a look at Workhorse. Workhorse describes itself as a technology company focused on providing sustainable and cost-effective solutions to the commercial transportation sector by creating an all-electric delivery vehicle that's fully integrated with their own drone system. Workhorse was founded in 2007 underneath the name AMP Electric Vehicles. They first experimented with adding battery electric power to two-seat roadsters before being contracted to complete the 100% electric GM Sky. Additionally, AMP Electric Vehicles were responsible for the creation of the electrification packages for the Chevrolet Equinox SUV, the Jeep Grand Cherokee, and the Mercedes-Benz ML350. Later, AMP Electric Vehicles went public in 2010, trading underneath the ticker AMPD, until acquiring the Workhorse brand and assembly plant in March of 2013. The asset acquisition then established them as an original equipment manufacturer, or also known as an OEM. Formally in March of 2015, AMP Electric Vehicles changed its name to the Workhorse Group Incorporated. Today, Workhorse trades underneath the ticker WKHS and has a market cap of about $1.4 billion with a share price just north of $12 a share. With about 120 million shares outstanding, the short interest of float actually stands at 31.45%, or roughly 34 million shares. Before moving forward, please, if you like this content and you want to see more like it, like the video, comment down below, and make sure to subscribe for more videos going forward. When investing, you should always be aware of who's directing the company that you're looking at. Dwayne Hughes, current CEO, served as COO for Cumulus Interactive's Technology Group, as well as the Vice President of Sales and Operations for Gannett. Robert Willison, the current COO, previously held senior management positions at Hughes Aircraft and Texas Instruments, as well as being the former director for fleet technology at Cisco. Steve Schrader previously worked at a group of utilities that are now part of Duke Energy prior to their acquisition in 2006. Don Wires, the current director of R&D for Workhorse, worked at Procter & Gamble for 35 years, where he was the first technology-associated director for power, control, and information systems, and currently, he's the co-author of several patents on machine automation and safety systems. And finally, you have Chris Nord, the VP of Commercial Development, who previously was the Senior Director of Advanced Technology and Energy Products with Ryder. Nord didn't join Workhorse until February of 2021. Now, frankly, that's a lot of experience on their team, and they've utilized it for some great partnerships going forward. Duke Energy provides them with their charging station infrastructure, and they have those previous ties as stated to Steve Schrader. Enerdell provides them a strategic supply agreement for batteries. Moog is helping develop and manufacture the Horsefly. Prefix helped provide the C-Series prototype. Ryder provides Workhorse with a service and maintenance agreement for fleets. TPI Composites has a strategic supply agreement, and UPS acts as the official drone delivery testing partner. Workhorse diligently protected themselves utilizing intellectual property laws, securing 5 pending trademark applications with 14 issued trademark registrations already, with the intention of seeking even more. They additionally have 19 pending US and foreign patent applications with 8 already granted, 2 of which are design patents with the intention of seeking more. The most notable of their patents would probably be the one expiring in 2036 for, quote, package delivery by means of an automated multicopter UAS/UAV dispatch from a conventional delivery vehicle. Now that we understand who they are and have a little framework built, what do they exactly do? Workhorse builds delivery vans, quote, built specifically for the last mile of delivery. So what does last mile actually mean? Last mile is a term used in supply chain management and transportation planning to describe the last leg of a journey comprising of the movements of people and goods from a transportation hub to the final destination. Now that we understand what the last mile is, let's take a look at the products that Workhorse provides, mainly They're two C-Series vehicles, the C1000 and the C650. They have a top speed of about 75 miles per hour with a range of somewhere between 100 and 160 miles. They can carry between 450 to about 600 packages, and all C-Series vehicles feature a 100% composite monocoque body, eliminating 4,000 pounds of chassis and body weight compared to a conventional internal combustion vehicle while carrying the same cargo. This all results in a 40 mpge fuel efficiency for the C-Series versus just 6 miles per gallon for a traditional UPS vehicle. This results in a reduced operating cost of about $1 a mile to just 36 cents a mile. Workhorse states based on this UPS data that they've collected, customers actually see a positive ROI within just 3 years when factoring in fuel, maintenance, and infrastructure costs. And of course, UPS has been acting as their partner in drone delivery testing for the Horsefly, their custom-built, high-efficiency delivery UAV that is fully integrated within their line of delivery trucks. Designed with a maximum gross weight of 30 pounds, the Horsefly carries a 10-pound payload and reaches a max airspeed of 50 miles per hour and has the ability to actually lower packages safely from 50 feet above. The Horsefly system is entirely designed to conform within FAA guidelines for UAV operation within the US. The autonomous system is integrated with the C-Series, using the truck as the jumping off point for the drone, and then the pair meet after the delivery is complete. The truck features a control center for the driver and the auto-landing Horsefly roof with charging capabilities. Recent updates to the drone allow for point-to-point package delivery without the need for a C-Series vehicle, and by itself actually reduces per package last mile costs by up to 95%. Workhorse also has a few additional side projects they had either sold or had been working on. Metron, a cloud-based remote management system for fleet managers to track vehicle performance. They had the Aries delivery app, a custom Horsefly user control center featuring location updates and real-time flight video. The W15, an electric pickup prototype they sold to Lordstown Motors for a 10% equity stake that has become the Lordstown Motors Endurance. Surefly, it was an electric VTOL being produced by Workhorse before being sold to Moog for $5 million. Additionally, Moog and Workhorse entered a joint venture centered around the advancement of technology and IP related to the development of unmanned aerial systems. Ultimately, as investors though, projects are great, results are better. So looking at the Workhorse full year 2020 financial results, we see that sales increased to $1.4 million when compared to just $377,000 in 2019. The cost of goods sold consequently increased to $13.1 million when compared to just $5.8 million in 2019. General expenses also saw an increase to $20.2 million when compared to just $10.2. However, R&D stayed roughly the same, with a slight increase to $9.1 million when compared to just $8.2 million in 2019. We saw other incomes increase massively to $321 million when compared to just $15.8 million in 2019, though that is largely due to their equity stake in Lordstown Motor Company. And the end result was a net income of $69.8 million when compared to a net loss of $37.2 million in 2019. Workhorse reported earnings March 1st, beating expectations, posting a 3.22 EPS. They boast an 8,000 vehicle backlog, including Pritchard Companies and Pride Group Enterprises. They have a cash position of $215 million as of March 1st, 2021. And it should be worth noting that Workhorse will be receiving a royalty fee for each electric pickup that Lordstown does end up delivering. Workhorse also has a large amount of institutional support behind it. Looking at the top 5 holders, we see that BlackRock has 7 million shares, Vanguard has over 5 million shares, Seaport Global has over 3.5 million, ARC Autonomous Technology and Robotics ETF has at least 3 million, and State Street had at least 2.2. Rounding out institutional ownership to almost 40%. When looking at comparables, It is Workhorse's expectation that non-traditional OEMs will be competing head-to-head with the likes of GM, Daimler, and Ford in the sub-600 cubic feet class, while the 650 to 1,200 cubic feet cargo capacity space is left largely ignored. The main reason behind this has to do with the cost associated with a more professional driver and increase in skill. In the way of traditional OEMs, looking at the Ford E-Transit and the GM EV600, both have a 600 cubic feet cargo capacity or less, and neither starts production until late 2021. Freightliner does have both the E-Cascadia and the EM2, but those range from classes 6 to 8, not 3 to 6. Mercedes-Benz does have the E-Sprinter and it's already in use in Europe, however it only comes with a 96-mile charge. In North America, it's widely expected for any mass-produced vehicle you will need at least a 100-mile charge for transportation. In the way of non-traditional OEMs, many consider Rivian to be the number one competitor due to their large contract with Amazon, however all of their vehicles will be in the 10,000 pound or less class. The Change V8100 out of California also only has a 650 cubic feet cargo capacity. And finally, the Bollinger Delivery does appear to have similar cargo capacity, but production doesn't set to begin until 2022, and there have been no blue chip names that I've been able to find to this point. Using the simple yet effective method of SWOT analysis, we can easily reflect on the merit of our investments based on the strengths, weaknesses, opportunities, and threats that we face. In the way of strengths, Workhorse has secured patents and trademarks. They are an all-electric OEM made here in America. They have strong congressional support out of Ohio, and they already have a product on the road. Weaknesses, we see they have historically poor production, though you could blame that on the prior management. They have a low staff count, you could also blame that on prior management, and they were impacted deeply during COVID as they simply just didn't have staff members to assemble vehicles as they were out sick. In the way of opportunities, we look at the compound annual growth rate of both sectors being drones and that of electric vehicles, and both are expected to explode. And don't forget about their 10% equity stake in Ride, and any success they have is also a success of Workhorse. But of course, you must mention the threats, which in the electric vehicle industry is quite a few. Firstly, we've never seen a mass-produced all-electric C1000 or C650. We don't know that the electric vehicle market is going to rapidly expand the way we expect it to. And also, we don't know that Workhorse is going to be a cash-positive company going forward. However, when we look at market research, what we can see is a very potentially bright future. The global electric vehicle market is expected to grow at a compound annual growth rate of 22% from between 2019 and 2026 per Facts and Factors. ARC forecast even a little bit more aggressively, saying that electric vehicle sales should increase roughly 20-fold from 2.2 million units in 2020 all the way to 40 million units in 2025. ARC estimates that at some point over the next 5 years, drones will be delivering over 20% of parcel shipments, and additionally that these drone delivery platforms will generate roughly $275 billion in delivery revenues, $50 billion in hardware sales, and $12 billion in mapping revenue, and this is all before 2030. So what's my take and why am I telling you all this? Well, first, I think any investment into a public security is and should be considered high risk. I think investing into a company that is not cash positive should be considered speculation. However, let it be known I am long on the stock and I have over 600 shares, and I might potentially add more on dips. I currently sell covered calls to reduce my cost basis and generate income off my equity. When I look around, one of the main reasons I'm invested into Workhorse is that I want exposure to both electric vehicles and to drone technologies. I believe both of these technologies are powerful and they're going to be immensely utilized going forward. However, Workhorse is an investment. Investments take time. They will take time to develop the technology, but also to envelop the regulation around that technology. When taking a look at the evaluations of the other publicly traded companies in the sector, I'm not comfortable buying their stock at the moment. To name a few, Nikola trades at $3.9 billion, and that's after the Trevor Milton fiasco. Hillian currently trades at $1.47 billion, GoEV is at $2 billion, CCIV evaluated at $5 billion, and Fisker is worth a whopping $3.7 billion already. Now, to my knowledge, none of these companies have the same background as Workhorse, they do not have the proven technology of Workhorse, and they do not have a factory like Workhorse. When all the factors are considered, we're not looking for Workhorse to overthrow a Ford or a GM, nor are we looking for it to be the next Tesla. The simple reality is they have more assets and cash on hand than some of these other companies. The additional thing worth noting is that Workhorse is not a SPAC like many of these other electric vehicle companies. They have a long and proven history, starting as an electrification company, kind of like what Hillian does now, and now they have their own factory and have become an original equipment manufacturer. And just one final reminder, I am an individual investor. I am not a financial advisor. This is not financial advice. My name is Dave, and this has been The Market Board.